Right, let's get more on this Parkland saga. We're joined by Ernest Wong, Head of Research at Baskin Wealth Management. Ernest, it's great to see you.
Yeah, great to see you.
A fascinating story, isn't it? Should Parkland have waited until it had its new board, if there was going to be a new board?
No, so I think the interesting thing about this situation is that the $44 per share offer is nearly identical to the deal that the board had reportedly turned down in 2023 to sell the company to Sunoco as well.
Yeah, although I've seen at least one analyst saying the environment has deteriorated quite a bit. I mean, oil is low, for example, and we got tariffs hanging over the economy.
Right. So over the last 2 years, we've really seen an overhang on the convenience store and the fuel distribution sector as a whole because of the sluggish economy. And then now you have the tariffs in place, which is causing margins to be compressed a little bit as well. And so that's kind of the backdrop of what Parkland is selling itself under today.
As of yesterday, there was something of a deal spread. The implied price based on the Sunoco units was about $42. But I mean, that's going to be a moving target. But I haven't done a calculation today. Is Parkland trading at something of a discount to the Sunoco offer?
Right. So it's trading at about a 10% discount to the deal spread. And there's a couple reasons for that. The first is that our guess is that most shareholders, especially in Canada, are going to elect to receive cash. So in the end, what will end up happening is that it will be a pro rata distribution of stock and shares. And obviously, Sunoco shares have fallen a little bit since the announcement of the deal. So that's the first thing. I think another thing is that the Simpson Oil has not really been they've not made their intentions clear as to whether they support the transaction in June and whether they're going to be voting in favor of the deal.
Right. They are irate that the meeting was postponed.
Yes, exactly. So there's a little bit of uncertainty about whether shareholders are going to approve the deal since they own 20% of the stock. And then I think the last element that maybe has not been discussed as much is the regulatory environment. So in Canada, for instance, given where the Canadian dollar is and given the whole situation with the United States, there has been a focus on, protecting strategically important assets and ensuring that they're not controlled by, ensuring that they're, staying in Canadian hands, right? And that's especially going to be notable for something like the Burnaby refinery for Parkland.
Oh, that's an interesting angle. So that inconceivably the federal government might be reluctant to see this takeover?
Exactly, and I think that's one of the reasons why, even if there was shareholder approval for the deal, it was expected to close in the second half of 2025.
That's fascinating. Your preference right now would be a proven operator in this space like Couche-Tard?
That's right. I think we generally avoid these kinds of messy situations where there's many different competing interests and uncertainty about whether a deal is going to be completed. We prefer to stick, as you mentioned, with Alimentation Couche-Tard. It's a proven operator. They have a track record of making smart decisions, and there's just no overhang on the narrative of the stock.
And interestingly, just going back to this federal approval process, because the deal is big enough, to get to have to go through that, there could be a long, drawn-out, foot-dragging process, as governments and bureaucrats like to do.
Yes, and the other, and I don't know whether this deal is going to require approval in the United States antitrust authorities as well, because that's another area where we have seen a lengthening of approval processes for antitrust as well.
Right. And they do have, as TD notes, they've got quite a grab bag. They've got stuff in Canada and the Caribbean. They've got the US. They have the Burnaby refinery. So it might be an awkward fit for some. And then, of course, all the fuel stations, the gas stations, could be an awkward fit for a lot of potential buyers.
Yeah, I think we agree with the view that it's unlikely that there's going to be a competing offer for Parkland as a whole company because, as you pointed out, these are kind of disparate assets around North America. You have a refinery in BC, you have some gas stations around Canada and the US, you have a fuel distribution business in the Caribbean, and it doesn't really fit in cleanly with any potential strategic acquirer, which is why originally when Parkland announced a strategic review, I think people were speculating whether that meant a breakup of the company to make it more cleanly to sell. But now that they have this offer, I think that is the easiest way.
And interestingly, TD, which has cut Parkland to sell, as I just mentioned, notes that same-store sales in the latest quarter were down, in the US, were down just over 10% ex-tobacco, because they've partly been struggling competitively in the United States.
Yeah, I think what you're seeing in the United States is that good operators who have strong investments in their backcourt offer. So investing in like fresh food, investing in like high quality coffee. Consumers are flocking to those concepts. And so one example might be Casey's. They sell Casey's General. They sell pizza in their convenience stores, and it's been very successful. And so, and this has been one of the areas that the activists have been complaining about, is that Parkland made a lot of acquisitions, and they didn't really do a lot to integrate the acquisitions and the convenience stores to ensure that they are driving traffic.
And they did that deal, M&M Meats, quite a while ago. And TD says they seem to be lagging in sales here. And TD says with M&M to blame. I'm not sure why, but maybe I'm not sure if the implication is M&M Meats has not worked out as well as they hoped.
Well, so the logic when Parkland bought M&M Meats was that they were going to be able to sell M&M Foods, the frozen burgers and the pies, inside of Parkland convenience stores in Canada. And I think what we've seen, certainly from the results of the supermarkets, is that consumers are, especially the lower end consumer, they are struggling with inflation still, and they have pulled back on purchasing these kinds of products.
Ernest has very kindly agreed to stick with us for a second block. He's going to give us some hot picks after this. 3 companies he says are great capital allocators. We'll be right back.